2 weeks since we last went on the air. Let's see. I know we had our I know we had our business meeting in Orlando 2 weeks ago, and then last week, we had the holiday, so just had a bunch going on. So it's good to be back in the saddle on Sunday night. As always, if you have any questions, any kind of ticker requests that you want us to take a look at, be sure to let us know, and we'll take a look at it as we move along. But yeah, like I said, we got a lot of stuff going on this week, no doubt about that. We're not lacking any kind of excitement going into the week, and we'll just kind of touch base of that real quick here. If we take a look at the economics calendar, we can see that it's a little quiet Monday and Tuesday. We have several Fed speakers here. We got Barr, we got Daly, we got Mester, and then we got Bostic at 12 o'clock. So Monday's going to be, tomorrow it's going to be a little bit busy there as far as the Fed speakers go. And then on Tuesday, it's a little bit more quiet, but we do have Bullard. We know how the market can respond to Bullard. And then Wednesday, of course, is going to be our key day here. Wednesday and Thursday, where we got inflation data coming in this week. We got our CPI coming in, which they are expecting a 5.0% on the CPI on the core inflation year over year versus a 5.3 over the past reading. And let's see, Thursday, we got the PPI and the core PPI. That is one of the readings that the Fed likes to use. We also have our jobless claims. And then Friday, we just end the week with the Michigan consumer sentiment preliminary. So, yeah, we got a little bit of a busy week ahead as far as the economic data goes. So we are going to be a little bit on our toes. And not to mention, we have earnings season kicking off this week. I know nothing really here towards the beginning of the week, but once we get towards the end of the week, that's when things get a little exciting. We got Delta, which we know airlines have been on an absolute rip these past 2 weeks. Delta, UAL, Jets, the Jets ETF in general has just been going insane. So yeah, there's going to be a lot of eyes on Delta for sure. Going to be looking for some positive numbers going into that one. But of course, do we get to have a sell the event kind of situation on that? We also got PepsiCo. That'll be a fun one to watch. And then, of course, we get into the financials, and that is going to be pretty darn crucial as we progress through the earnings season. So as you can see here on Friday, we have JP Morgan. That one's going to be a good one. You also have United Healthcare. United Healthcare is going to be interesting also because it is the heaviest weighted name in the Dow Jones, and the Dow, we'll get into that in a little bit. You also got Citigroup, you got Wells Fargo, so you got some of these smaller banks here too that are reporting, and you got BlackRock. So a lot of interesting stuff on Friday before the bell. And then, of course, the following week, we'll have even more financials. And then we start getting into our tech-heavy names. So, yeah, we're not going to be lacking any kind of excitement as far as the economic data goes and as far as the economic calendar goes. So definitely, maybe, keep your head on a swivel. Not to mention the crazy price action that we have been having over these past few days. We ended the week last week. We can clearly see here on the SPY, we have this nice little resistance level up at the 444 level. We just can't seem to break above that. And, this market has been quite resilient. We know that even with the semiconductor news and Biden cracking down on exports to China so we don't give away our technology and they can use that for any kind of weaponry systems and all that. So, yeah, even though we had that news, we seem to be bouncing back, but we just keep hitting our head at this 444 wall. And, we did get this nasty little gap down on Thursday, printed a hammer candle. Things were still looking pretty good, but here's where the trouble starts to lie. Even though we're hanging out here at the highs, the longer we hang out here, the the little more iffy it gets. But what's more important here is this gravestone doji candle that we have. Just call it a doji just for simplicity's sake. We have this doji candle, and it's not the prettiest candle out there in the book in regards to candlestick patterns out there. So what you have here is you have this nice, oh, we're going to take this, we're going to rally up into the highs, and then you can see here on the 30-minute chart here where we just sold off, and yeah, we had no buyers come in. And also want to point out, if we zoom in here on the hourly channel, which is going to be right here on your screen, we do have some negative divergences in play here that I want you to kind of be in mind here. You can use any kind of momentum indicator, and it should kind of reflect this anyway. But what we're looking at here on the SPY, or you can use the SPX or the ES, whichever venue you do wish to utilize here. As far as the SPY goes, you have a higher high followed by a higher high, and we just can't seem to break above 44. But what's important to note is the slight higher high, and we have a lower high on the momentum oscillator. So we do have some negative divergence here in the shorter term time periods. Now, we could argue, yeah, our larger time frames, this is still a very bullish structurally chart. On the daily, we have a rising 21 EMA, we have a rising 50-day, and we have a rising 200. So everything, structurally speaking, is good on the SPY. Series of higher highs, series of higher lows, everything's looking good. But on our smaller time frames, we are starting to see some cracks within the surface here, and there's also a few other things that we'll get into that are showing some signs, some warning signs that we definitely want to pay attention to going into this week with the key inflation data, as well as earnings season. That maybe don't be too overly extended into positions. Just kind of keep it a little bit light until we can get this situation resolved. And the question is, well, how do we get this resolved? So usually with divergences, typically speaking, whenever you have a divergence, see how you have the little slight higher high here, but the divergence is giving you a slightly lower high. What we need to do is basically come back down to the scene of the crime, and that scene of the crime is right here at about this 430, 432 zone. We'll give it a zone here, and that would give us a retest of the 432 level, as well as the hourly 200 here, which is your red line here. So if we do get a pullback, we could see a slight pullback to, just about 6 points on the SPY. And if we see this hold, great, then we can turn up and see where things want to progress from there. But as far as things go, yeah, we do have some warning signs here. You can see that I got a freshly printed early sell signal here on the SPY on the hourly, also here on the 30-minute with a crossover on the oscillator. So we definitely want to pay attention to that. So the 432 level is going to be our key support. We can see that, the last time we had a pullback, we had this nice run up into that 444 level, and we had a 6-day pullback. It was only 6 days. We didn't even quite get a full mean reversion. We came close, but we didn't quite get it. You can still see there's a little bit of gap between price and the 21 EMA. So that's all that is. Mean reversion for me is just price pulling back into the daily 21 EMA. So we didn't quite get that, but if we want to use that as our benchmark, we can say, okay, so now we're at 1, 2, 3, 4-ish 4 days into this pullback. So if we do even get 2 more days or so of pullback, then yeah, that could be welcome. And then we'll just be in this nice little range between 431 and 444, which is, if you're an iron condor kind of person, this is a great setup for you to be in, because now okay, well, I got support down here, I got resistance above. I'm going to put on an iron condor and just play the in-between move and, make some profit off of that. So that is one way to do it. You could wait until things come back into that 430 to 430 zone. play the support, bounce off of that, and then off you go. So there are plenty of ways that you can play this price movement within the SPY. So that's one key thing that I do want to pay attention to. There's not going to be a whole lot of nuances as far as, you know, all the other indices go. So we'll take a quick look at a few of them. We'll just look at the NASDAQ. One thing that I do want to point out here on the NASDAQ is that the NASDAQ is doing a special rebalancing situation here that will go into effect on July 24th. So what does that mean? If you read into it, and I can post this link, I know I posted it already in the Discord, but basically what we are looking at is they're not adding or removing any names, but they need to basically resize the top end thing. So if you look at the weightings of the names within the NASDAQ, Microsoft is like at 12.9, Apple's at 12.5, Amazon's at about 7, Nvidia's almost to 7%, and then there you got Goog and Google, which combined is about 7%. If you total the big names on the QQQ, they add up to about 46.5%, give or take. But what they need to do is that they're going to have to cut that down from 46.5%. They're going to have to cut that down to 40%. Got it? So they're going to have to take Microsoft, they're going to have to take Apple, they're going to have to take all these big boys and basically just trim them down a little bit. So maybe you have some forced selling going on within the main index. We'll have to see. Once again, this thing doesn't kick in until July 24th, and it goes into effect the morning of. So we'll have to see how that may affect the main index there. And then, of course, we'll have to see how that affects the main players there. But, you know, it's just a rebalancing of the big fellas. So we definitely want to be mindful of that. So moving on here to the actual price structure here on the NASDAQ, you can see that we do have some pretty, you know, it's a very strong uptrend, and we haven't really touched the daily 21 here. Let's see, I'm going to have to zoom out here if you can bear with me. Yeah, look, we haven't touched the daily 21 until really May. So it's been a while since we've had a full mean reversion situation. I mean, we came close, not quite. You can see that gap that we talked about there on the SPY too. It's the same situation here. We haven't quite gotten that full mean reversion. So what I'm watching here on the Qs, just like I am on the SPY, I'm going to watch to see if that Thursday low cracks. If we do get a crack of that Thursday low, then yeah, we could easily come back in and retest the daily mean. And there's already some weaknesses out there. We can see that the structure on the hourly is again a little bit sloppy. You know, it's turned sideways for the time being. That's more neutral. It's not a good position to be bullish or bearish just yet. But if we start to see things crack below 365, then yeah, we can get a revisit to the hourly 200, which is that 360 level on the hourly, but you know, we have that dynamic on the daily at the 362. So you got a few key levels there to look out for. And you can also see that we are starting to enter a squeeze here on the daily that we want to be kind of mindful of. Maybe things are just setting up for earnings season, which is coming around the corner, and there's going to be a lot of eyes on how some of these big tech names perform. You know, the Morgan Stanley is pretty bearish going into the earnings season. I think they're saying that they've ran up so far that they just can't beat what they've already put out there. So we'll have to see, of course, how things shape up. But Qs, they've been strong. We know the resiliency of this market is pretty resounding, and you know, this daily candle is not that pretty, and you're going to see this across the board. You're going to see a lot of these daily shooter candles, and it's a topping pattern. It's a reversal. You could see you know, a break of the Friday's lows and just give us a nice little downward move, hopefully. And maybe if we do get a retest of the daily mean, that's fine. What I don't really want to see it is a close below this, because that could mean a different story here. But if we do that, then we'll have to reevaluate. We do have plenty of support down here at the 350 level. So if we do happen to close below the daily 21, which is dynamic support, it's not so much price support. If we do happen to close below this, then I am expecting maybe a retest of this 350 level. That would be a retest of the 618 retracement, which is a retracement off the all-time high and the swing low over here. So that would be just a nice little retracement. It would also probably be a retracement to the daily 50. This will probably catch up to this level as well in the upcoming days. So that would give us a nice confluence to work with. So QQQ support at the dynamic level at 362, 360, and then 350 is going to be your major support there on the NASDAQ. But like I said, if things are going to persist going into next week, I'm definitely going to be watching the hourly 200, and I'm definitely going to be watching this 360 level, and that would also give us a full mean reversion trade. Now, moving on to probably the most interesting one, and that is the small caps. The small caps have been doing pretty well considering everything that's going on within the broader market, as well as everything going on in the bonds and the higher yields. Now, the IWM can probably withstand a little bit better of the higher yields than maybe tech can, but we'll have to see how this dynamic plays out. Friday you had a big move. What's happened here on the IWM is actually really awesome. It's really constructive to observe. We were in this really tight range between 180 and 170 for the longest time. Here, let me just zoom out here and let me zoom back in, kind of give you that full view. All right, so here you have price between 180 and 170. We were stuck in this range for what seemed forever. You can see just bouncing back between 180, 170, Iron Condor, Delight, Paradise. Even if you played the 170s, I mean, it's just really easy. And we finally got that breakout of 180 last month and a half ago, back in June. We got this breakout, and we actually played this move. We played the breakout of 180, took profit at the 618, and we traded around this 618 level for a few days before coming back, retracing, holding this 180 period. Now, we know based upon historical price action, prior resistance can act as support, and that is what has happened in the case of the IWM. We came back in to the 180 level, held it, and bounced back, hit our heads yet again at that 618 level, came back down, retested 180, because why not? We did it again. They did it once, they'll do it again, right? Bounced yet again on Thursday. Friday, we had a great follow-through move, filled the gap that was made on Thursday. See here, if we zoom in. We had this nice little gap down on Thursday. We filled that gap. Yeah, sure, you got this, decent little wick here, but the close of the IWM was significantly better compared to the NASDAQ and the S&Ps. So we do want to pay attention to the small caps. Maybe there's some relative strength. Maybe we get some rotation, especially if we do start to see some of that forced selling and rebalancing within the NASDAQ. So I definitely want to pay attention to the IWM going into this week and how it responds to some of this economic data. And just overall in general, if we do start to see overall market weakness within the Qs and within the S&Ps, I just mainly want to see how the IWM performs. You can see here on the daily too that we have a nice daily squeeze to work with. The hourly, you do have some upward thrust signals, and everything's looking pretty decent here, a little bit sideways, but looking to see if we can break back above the 618 and have a good close back above it to try to get us back up to 190 and even that 200 level ultimately. So we definitely got some potential here with the small caps. So that's going to be a main thing that I'm going to be watching with. Now, here's where, when we start to look at the broader markets, one of the main things that, we need to do is really start to find where, especially in this market, where are our problems? What are the key factors that could make things could act as a headwind or potentially drag this market down. And the key spot here, and we've been talking about it for a while, is the bonds. The bonds have really been a crucial spot that has been kind of nasty over these last few days. And if we pull up the HYG, and the HYG is the junk bonds, it's the junk of the junk. And usually if these guys are performing well, pretty much the rest of the market is performing well. So it's a good benchmark to kind of take a look at. And I encourage you, especially at this point in time, if you don't have the HYG as a market internal, then I suggest that you have it up there and just kind of keep an eye on it as a daily market internal to see how well the junk bonds are performing. And to be honest, the bond world, it's a complete mess right now. All this effort that was made to break us out, it was pretty much just thrown out the window. You see, if we zoom in here, we can see that we had a nice trend line break, a close above it, and it looked like this daily squeeze was ready to shift up. If we kind of zoom in on that too, you see how you got those light blue ticks here on the daily squeeze. It looked like it was going to start to curl up, but guess what happened? We had this nasty gap down and we started to flush. And you also had that picture here of that ugly shooter candle, just like everything else. You're revisiting the bottom end of that trend line, and the squeeze now is firing short with a downward thrust signal. And even on the hourly, if we look here on the hourly time frame, we can see that how damaged that structure now is. You have a crossover on the oscillator, you have downward thrust pressure here, as well as a newly printed downward move here. So if they can't turn around the junk bonds, then this is going to be a pretty big headache overall. So we do have a squeeze with the daily sell signal, and if this plays out, they can easily just sweep the stops here, and you're going to cut out these guys. You're going to, here, I gotta zoom out. All right, if they sweep everybody out of their positions, that's going to cut these guys. That's going to possibly even hit these guys down here at the 72.5, which 72.5 is probably a big level to kind of pay attention to. So right now it's not really good, and this is suggesting that the market might be in a little bit of trouble. So we definitely need to keep a close eye on this and see how things are going to set up, because it's a little bit of a rough combination of signals that we are witnessing here on the HYG. And not to mention, if we go over to the 10-year bonds, the ZB, let's see, I can probably just do that here. Let me go over here to this chart. Let's see, ZB1. Yeah, I use TradingView and I use TOS, depends on how I want to use this. All right, so if we look at the bonds here, this is your 10-year Treasury bond. All right, we can see that, we've really started to roll over on the price here. We had a nice little wedge here, couldn't break above it. It got really wicky up here at the 128 mark, and they just absolutely flushed. I mean, look at what happened to the bonds here. The 10-year is just absolutely nasty. You have this breakdown. Tech is going to be sensitive to this. And yeah, down we go. And if you look here, I got this measured move here from the swing high to swing low and to the new swing high. This is a 3-prong Fibonacci extension. It actually gives us a nice little confluence here at this 122 level. So if we do continue to move lower, then yeah, I'm looking for this 122 zone to hold. But if not, it's looking pretty nasty out there as far as the bonds go. And then of course, that is also reflected in the yields. The yields have had a incredible breakout move, and yeah, this is just another warning sign out there that we need to keep a very close eye on, because if the 10-year continues to, if the yields continue to push on higher, then that is definitely going to be a troublesome spot as far as the big tech goes. Sorry, I looked at something on my screen and got a little confused there. And even still, if we use the retracement tool here on the yields from the swing high to the swing low on the TNX, I mean, look what that gives us. That gives us a complete full measured move to the 5% range. Now, can you imagine the pain in the market that will happen if rates just launch up here? Now, I'm not saying it's going to, but it's a scenario that, maybe just write it down. Of course, we've always talked about the yield inversion. It's not so much the inversion itself, it's the uninversion. And we're not quite there yet where things, are sounding the big alarm, maybe. But definitely something to pay attention to. So the rates go up, bonds go down, tech goes down bad. So we definitely have to pay attention to this dynamic also. One thing that I am paying attention to, okay, so if we get this rotation away from, big tech and we start to rotate into other things, one thing that I am looking at is energy. Energy has this nice pattern that I am observing here on the daily. If we do get a breakout above, we'll say this 81, 82 level, if we get a daily close above this mark, then energy names are looking pretty darn interesting. Of course, we need to also kind of keep an eye on crude oil. Crude oil, it hasn't really done much of anything, but what we can do here with crude oil, and we talked about this last week and the week before, is that, yeah, crude oil isn't really doing much, but you do have a tradable bottom to work with. So you have the 66 level seems to be acting as a pretty good level of support, and off we've kind of run from there. Not to mention the seasonality of crude oil in itself as we get into the summer months. We also have OPEC. They just keep cutting and cutting, yada, yada, yada. And also, I don't know if y'all been watching, our petroleum reserves are just at like lifetime lows. It's kind of bothersome to me if you kind of look at it. But anyway, as far as the crude oil goes, yeah, we got a tradable bottom. That's probably the best thing here. Now, I definitely like it a lot above 82.50, but one of the things that you can trade here is, okay, you can play this bottom, you can play the run up to 82.50, and possibly, lighten your load up here at 82.50. But if you do get this breakout, great. But if things start to turn back around, guess what? You can just short it and, play the opposite side. So that's crude oil in a nutshell. And if we take a look at our main screens here on crude oil, just to take a look at the signals in general. Let's see. Yeah, we got a daily squeeze here to work with. You do have a 21 EMA crossing the 50 EMA. Last time we had this, we had to cross down back here in May, and since then we're kind of gearing back up. But you can see the squeeze is really starting to pick up some momentum here. We do have some upward thrust. If this can get above the 50 line and the oscillator can cross back over, then this would definitely give me a little bit of more of a green light. Even so, here on the hourly structure, you can see where that 21 is above the 50. So you got white over blue, blue over red. This checks out. We got the buy signals are in good spot here. The oscillator's in a pretty good spot. 30-minute chart, same thing. You look good here. You could possibly wait for a new squeeze to shape up on the 30-minute. That's probably what I'll probably try to pay attention to. You can see that we do have a little bit of a momentum shift here on the dark blue. But overall, yeah, crude oil is, it's interesting. It's definitely interesting. And there are a few players here that I'm going to be paying attention to this week. If we really want to dive in, we can just look at some of the names that I'm looking at this week. I do see some comments here. If y'all have any ticker requests, feel free to shout them out. We'll take a look at them at this point. So be sure to post them out there. Let's see. You have the BND ETF. It's an interesting one. ALB. Let's see. I haven't looked at that one in a while. Oh, Albemarle. Yeah, this one actually looks kind of juicy. Yeah, any of these defensive names, yeah, look pretty interesting. So Alb, you actually had this nice little. Here, I'll bring up TradingView so it's not so messy. Here you had a nice little breakout here above 235. That's actually a very clean move. Now we're just looking to see how high we can get. So 255 seems pretty reasonable. You got a nice little trend line if you want to put that there also. Nice breakout. Let's see if we got any kind of squeezes here on ALB. If I can get this out of the way. We'll get there eventually. Okay, so one thing we want to pay attention to is we're hitting our head right on the daily 200. So we might stall out a little bit here, but we do have a squeeze here. Look at that. Ooh, I like that. I'm going to write this one down for myself too. Nice shout. Russell, thank you for that one. Yeah, ALB looks great. If we do get a breakout of this 241 mark, yeah, I'm looking for higher prices into 260. That's going to be the next level here on ALB. See, this is a nice little resistance zone overhead. ALB, I will pay attention to. You got a nice little squeeze on the daily. If we do happen to get a pullback to the 30-minute 21, that could set us up for a new squeeze. And that could be a nice little possible zone to buy the dip and see if we can't get a move higher. So I definitely like ALB. Schwab, I know we got a lot of the stock dads here that are long-term in Schwab. Schwab looks good. I'm not complaining about that at all. We know the regional banks have struggled a lot, and we know that the market has, hasn't been too kind to these regional banks. But Schwab is definitely an underlier here. Schwab has really good fundamentals. Chris has done a lot of DD on Schwab, and I trust his DD. And so now for Schwab, I'm looking to see if this thing can break 60. If this thing can get above this heavy resistance level at 59.60 zone, yeah, I'm looking for this thing to move back to the daily 200. You got some interesting signals. This is technically bearish just because yellow is still below red and it's below the 50 mark. I don't have an up arrow here yet on the thrust, so I am going to be looking out for that. But as far as the hourly structures, you get a little bit more positive movement. You got a positive white over blue, blue over red. Starting, you might be entering a squeeze here. This is technically neutral bull. If the purple line can cross above 50, that's even better. You also have some upward thrust here on the hourly. 30-minute looks pretty good also. So Schwab, smaller time frames are improving a lot, and we know that if they're going to fix things, you're going to have to start from the smaller time frames and work your way up. So as it improves, we're going to have to pay attention to that 60 level. If they can break out of 60, things look good for 67, 68, which I like this 67, 68 level because you not only have this good price level, which, you could consider that, what they call a mother bar in the strat world. If you do get up to that level, that would also give you a retest of the daily 200, as well as the weekly 50 up here. So there's a lot of levels there's no lacking in the levels as far as Schwab goes. So this is actually looking pretty interesting. And then of course, you can just look at the KRE in general as far as the ETF. Let's see. Yeah, that 2 market plan. What's up, man? Good to see you. That 200 simple is going to be, yeah, for sure on Schwab. That 200 SMA is going to be a stiff level to work with. And if you want, you can just look at the KRE in general. It's still messy. I mean, this thing's been damaged. You may have a possible inverted head and shoulder here, but we need to confirm that by breaking the neckline. We need to break above 45. If this thing can confirm above 45, yeah, I'm probably going to jump all over that and ride that thing to 53. We may have to pay attention to some of the option flow as far as the KRE goes. We can keep an eye on that. But this daily inverse head and shoulder potential has some interesting ideas. You can see that it's still a little bit sloppy here on the hourly. no doubt about that. But like I said, if the KRE can get going too, this will have a positive impact on the IWM, which could be pretty fun. So if the KRE gets going, watch the IWM. If the IWM gets going, watch the KRE, and off we can go. So I definitely like the idea of this dynamic in play right here. That is definitely going to be on my watch list for not just next week, but probably in the weeks to come. Let's see. Okay, so back to, I know I was kind of talking about energy, and then I kind of went on a segue there. A few energy names I like. COP, Conoco Phillips. We'll just pull up this chart here. COP. Now, I know a few of y'all are probably going to ask about Oxy. We know Warren Buffett loves Oxy. He's been buying the dip. I think his average is like 55, if I'm not mistaken. I have to remember. 55, 53, something like that. So COP looking pretty good. 105.70 is going to be the key level for me. If we do get a break above that 105.70, look for a move to about 109.110. So have that one marked down. You got a nice trend. You got a nice little triangle here. If we can break above this, sure. 105, 110, why not? Looks pretty good. And then if we look at the signals, let me pull this back up. COP, you got a nice daily squeeze forming here. Nice squeeze. It's been compressing for quite some time. And you can see that big resistance zone here, even better here. And then you have some upward thrust also. This is neutral bull. When that's neutral, we look down, and we're starting to get some pretty interesting signals. Like I said, we also have to kind of pay attention to crude oil in general too. So if we do start to see some of that rotation out of big tech into some of these defensives like energy, COP, not too shabby. CVX or CVE. Probably, I'm more familiar with CVX than I am CVE. Cinevis, I haven't really played CVE. Let's take a look at that, see what I can come up with. All right, so we do have same situation here. CVE, this is Cinevis Energy Inc. Yeah, I'm not too familiar. I don't think I've ever traded this one, but you do have nice support down here at the 15 level. We do have a squeeze. Maybe we can slingshot this to the upside. You need to clear 18. That's not only a price resistance, but that's also the daily 200. So you have to look out for that. That's about 80 cents away, so that's not too bad. Hourly starting to shape up. 30-minute, maybe a little bit of a double top. I'm not seeing any divergences there. CVE, yeah, pretty clean. Nice clean levels to work with. 15 as support. 18 as resistance, so definitely pay attention to that. Let's go take a look at CVX, which is Chevron. Yeah, you can see my level here at 160. If you can clear 160, it gets a little bit better. It doesn't look as pretty, I don't think, as COP or MPC. So I'd probably look at CVE, but CVX, yeah, you got support down here at 150, overhead at 160. If you clear 160, your measured move is going to be all the way up here to 170. So 10-point measured move. You can see that you also have another line up here at 172. You're starting to maybe kind of curl on the momentum. Yeah, this one's probably a little bit more iffy to me than looking at COP, but the levels are clean at least. You got 150, 160, then 160, then 170. So that's easy to remember, and you can just set alerts on those key spots. So that's not too bad. The other one that I like on energy is ExxonMobil. Let's see. Weekly. Here, let me pull up this chart just so you can see it here. All right, so here's our daily chart. Yeah, I guess this is kind of like CVX too. Nice clean levels to work with. You have 101, 100 as your support level, and you have overhead resistance up here at about the 110, 108 zone. So you could possibly play a bounce to here and cool it that way. And then if you get the breakout, great, but I'd probably start to shed some here if we get up to that spot. And then also with ZOM, you do have that smaller squeeze. I see, I don't like that you don't have the up arrow. In fact, you got the opposite here. And you don't have any upward upper arrows here on the hourly either. So I am lacking a little bit more signals on ZON, so we may cross this one out as far as our play, but you do have a nice level to work with. So you have a good level, just lacking the overall signals. So we need to pay attention to that. And then, of course, MPC is going to be the last one on the energy list that I'm going to be paying attention to. You can see here, you actually closed above the daily 200, unlike some of the other energy names, and you've been holding the weekly 50 here as well. Support down at 105. We'll see. Maybe you can break above this. You do have a squeeze here that's in better shape. You see this histogram, you got a light blue. If we can get another light blue print up here, then yeah, that could give us a 2-dot squeeze, fire long, and we could send this back up to about that 125 mark. So I'm going to be paying attention. All I need here from the daily is an upward arrow here. This is neutral bull, so I just got to wait for that signal to pop up on the daily. But as far as the hourly goes, yeah, not too bad. You got white over blue, blue over red. That checks out. Same thing here. If we do get a pullback, I'm going to look for that pullback to hold the hourly 21 and kind of go from there. So if I'm looking at energy, I'm looking at COP, MPC, and then I'll add in CVE. All right, so there's CVE. Of course, we can't, go on without talking about Bitcoin. So let's take a look at Bitcoin real quick. And let's see, Bitcoin's having a little bit of a struggle here at this 31,000 mark. You can see these wicks are just all over the place. Very, very wicky on the upside and to the downside, for the matter of that fact. I had this flag pattern labeled out. It looked like we were going to send it, but we didn't quite get there. So now we're just in this kind of wait and see approach. I know there's a lot of news out there as far as, is BlackRock going to get their ETF approved or not? What's going on with Coinbase? Who knows what's going on with Tether? Have they fixed Tether yet? I mean, God knows what. I'm not truly the Bitcoin expert, but I am watching the price action here, and we can see that we're just kind of in this holding pattern between 31K and really 30K. Depending on where things break, we can play it either or. We do know if we do break to the upside, some of these miners are going to go absolutely apeshit. And we know if we go to Mara's had an incredible run, and it's actually a really, really good example of what to look for in a squeeze. And let me pull that up on the daily time frame here. Mara, as you can see, let me zoom into this so you can get a good look at it. This is a prime example of what I love about the squeeze. You can see that we've had this tight range consolidation, volatility just drained out. You got good tight zone here between 9 and 1050. Look at this squeeze, big compression here. And look at this, we had this breakout. We actually played this breakout, 1065, moved on up. We took profits here at 12, and it's just kept on going from there. And look at this histogram, just absolutely gone berserk. Yeah, regulation tall, it's never a good thing, never a good thing. And yeah, you had your key level breakout on the close. You got a little bit of a pullback followed by a follow through on Mara. So if you have Mara, if you play the squeeze in any shape or fashion, screenshot this, because this is great. This is a very constructive play. Look at the volume too that came in, that has poured into Mara. I mean, just absolutely insane. Good breakout. You had your level, you had your momentum, and you had your trigger with the thrust signals. They all lined up. So this was beautiful. Now, at this point in time, we kind of have to wait to see what happens. Even still, Mara's still outperforming Bitcoin. That's just what's happening right now. If someone can explain it, great, but you have a very good move here on Mara. If you're not in it, wait for a pullback. See if you can get a pullback to at least this dynamic 21, which will probably catch up to this 1350 level, which is where, was the next spot there. So Pay attention to Mara. You know, we played it on the upside. I also had shares of Hut, which I played the breakout at 250. I've just been shedding and raising my stops on what I have. So Mara, Hut, they look good. MSTR also looks fantastic. The one name that I do avoid is Coinbase. Coinbase has honestly been underperforming everybody else, so I haven't really touched Coinbase. I know it's very tradable, it's very liquid, and it's you know, I guess it is kind of performing a little bit better here. But we also had that news on, what was that, Friday? Or yeah, that was a nice Mara play there. And Coinbase, yeah, I just don't, for some reason, I just never get a good read on Coinbase, so I just kind of stay away from it. But the levels are kind of nice. You're coming up to 84.50 resistance. You're above the main moving averages, which is nice. We'll see how tomorrow goes as far as Coinbase goes with that news. I can't remember it off the top of my head, so we'll just have to play it by ear. But the key thing is, all these miners, they're really outperforming and kind of leading the way here on Bitcoin. I haven't really looked at Ethereum, however you pronounce it. I haven't looked at this one in a while, and it's just kind of the same thing. We need it to break really above this tweezer top at 21.31. But you got a nice little series of higher lows here to work with. So that's pretty good. Don't really want to see this break back down, that's for darn sure. So yeah, Ether, it's not doing a whole lot just yet, but you know, you got a tradable bottom. So I would just kind of pay attention more so to Bitcoin than Ether right now. Just my flavor of tea there. Moving on to some of the other names. Adobe. Watching Adobe to see if it can break out of its consolidation. It's very tight range here on Adobe, holding 473. Looking to see if we can't get a break above this 496 mark. And let's see, I have that drawn up on my other charts. But yeah, if we do get a break above 495, looking for this thing to push 520, 550 even. But if it does break down below 470, you know, look out below. You do got 453. A name that I'm looking at to the downside, if the market does want to wet the bed, poop on itself, Oracle might be a little bit of a problem. So Oracle, you have this nice earnings gap that is trying to hold. Don't get me wrong, it's trying there, but you do have that shooter candle on Friday, and you closed below the 21 here. That could be a little bit of an early warning sign, and you do have a gap to fill towards that 110 level. So I'm definitely paying attention for Oracle. If the broader market wants to have that general weakness, Oracle, yeah, watch that possible downside move. I'm also watching Amazon. This one's shaping up pretty well. We do have the weekly 200 that we're kind of wrestling with at the time being, but we do have a daily squeeze to work with. Just kind of keep in mind that rebalancing, that the special rebalancing that the NASDAQ is going to be doing in a few weeks. But Amazon, you still have really, really good structure here. Very bullish. And usually when you have squeezes, they tend to fire in the direction of the primary trend. That trend being higher. If you forget about all the worries that are going on within like the bonds and all that. So Amazon, look for this breakout above 131.50. Looks pretty good to me. Got a nice little daily squeeze. You still have active thrust signals back here in May. She looks good. Not really having any complaints here on Amazon. Let's just double check the hourly time frame, of course. To kind of break, yeah, it's just sideways, you know, 127, 131.50. I mean, that's pretty much what you're working with. If we do happen to get a pullback, let's see if 127 holds yet again, and from there we'll see what happens. Maybe we get a new squeeze occurring on the hourly. We get those nested squeeze where you get the 1 hour squeeze, and if the hourly squeeze can fire along, boom, the daily squeeze can fire along, and that's how you can play that, and you just, you know, buy the dip accordingly. Yeah, we can look at Microsoft. I got questions on Microsoft, Snow, Apple. Yeah, Apple, the one holding up the market. You know, I've seen a picture of, you know, Goliath or whoever just holding up the world. All right, Microsoft. Yeah, Microsoft is definitely interesting. Now, if you take that picture of Mara and you compare it with Microsoft, all right, so you have Mara, you have this nice tight range here. You got a little bit of a squeeze. It's not a squeeze compared to Mara, but it's squeeze nonetheless. One key issue that we're wrestling here with Microsoft is not only the rebalancing, is that we are seeing a possible shift here on the smaller time frames. Do you? Is that a ticker for real? Do you? Yeah, I'll definitely check that one out. Microsoft on the smaller time frames, you can see that we've gone a little bit neutral here, where price is just kind of going in and out of these main moving averages. We did come down here and test the hourly 200 and bounce from there. So if we do pull back a little bit more, I will expect the hourly 200 to hold, which would give you a nice retest of the daily 21. If we do happen to get a close below this hourly 200, I am most likely going to shed my Microsoft position and wait to get in when things are a little bit more clear. You can kind of see the 30-minute time frame here is also showing some weakness, where the 30-minute closed below the 30-minute 200. You can see that price is now below the white, the blue, and the red. So a little bit of concern there on the 30-minute. So if Microsoft gets a little bit wacky, I'm probably going to exit, but I will be looking to get back in once things show a little bit more clear picture, especially with the bonds, especially with see how the rebalancing, special rebalancing goes later on in the month, and we'll just kind of go from there. If we happen to lose 334, 335 zone, we can come down to 328.50 and possibly even that 325, which is the daily 50. So you got nice support here down at about this 320, 324 zone. So that could be a nice little spot to maybe pick some up for your longer term. So Microsoft is one of my favorite long-term names to pick up. If we do get a nice little dip, yeah, that's probably where I'm going to be looking for a nice little dollar cost average, or just to add more shares into the long term, because why not? Have a shopping list ready to go, maybe if we do get a deeper pullback. But yeah, Microsoft, you got to squeeze, but we really need to start to see some life. And if we don't get that on Monday or maybe even Tuesday, then I'll probably shed my current options position off of Microsoft. It is what it is. We just got to play it by ear from here. But like I said, this is still pretty resilient market, and we'll see if we can get that breakout above 342 towards 350. Now, in the longer term picture of things, I still believe this market will go higher. So I do still have that overall broad market idea that, you know, even if we do get a pullback within the broader market, to me it's just a pullback, and we're in for higher prices. So may have some headaches in the near term, but I still think we overall move higher. So that's just my overall assessment and viewpoint of that. Take it as you will. Database is going really good right now. Oracle, yeah, it could be for sure. Let's take a look at Snow. And like I said, on Oracle, if it holds that key spot, if it does hold that gap, great. Then that can just, you know, be our crucial spot there to work with, which is great. But of course, if it gives me that gap fill, I'm going to play that gap fill. Snowflake, daily squeeze. Let's see. You got this nice little zone here. Was that 190 to 200? Let's go over here to this chart. Yeah. Oof. Snow's interesting. Okay, so we do have a daily squeeze here on Snow, but look what's happening here. Can't seem to break above. You do have a squeeze that's looking to fire short. We have a negative thrust here. This is neutral bull, just because yellow's still above 50, but purple's down here below 50, so that's a little bit more neutral. So we look down here. We got an early sell signal here on the thrust. Could be some trouble. Hourly, you got a squeeze also here. Let's see if we can zoom in on that. But as you can see, price is, it's pretty nasty close. Price is still trading below the main moving averages. So we still, if they want to repair this, they're going to have to get back above 175. No question about that. We do have an hourly squeeze. You still have an active sell here on the thrust. Even the 30 minutes giving you some nasty signals here. SNO, if it can repair itself, if it gets above 175 and the squeeze does want to fire long, that could be great. I still need an up arrow on the hourly. So 3 things here. 175, we got to get above that if you want to be a bull. We also want to see light blue histogram continue to shape up. And then I want to see an up arrow here on the hourly. So we'll mark that as 175 on the notes and keep an eye on it. But as far as this goes, this daily squeeze looks a little sus. If you break 170, that daily 50 could be the key spot. If you lose this, you come down to 155. Retest the daily 200 at least. From the daily 200, you got a level here at about 140, 145. So that's where I'm looking at on SNO. Yeah, this one's definitely make it or break it on SNO. So we'll see. That daily squeeze and the hourly squeeze is, ooh-wee. It can repair itself, but bulls are going to have to do it and do it quickly. So we'll see. All right, so we have Apple was requested on the social, so we'll take a look at that. All right, Apple, we know Apple has been the strong of the strong. It's just been absolutely resilient. It trades +4, +5 ATR. We have not had a mean reversion since May, and ever since then, every dip has essentially been bought. If you put an 8 EMA up here, you're pretty much buying the 8 EMA, and you're right. And that's how strong this trend has been. Very strong lifetime highs. There is absolutely nothing bearish about lifetime names that are making lifetime highs. With that in mind, can she pull back? Sure. Why not? I mean, it can't stay up for forever, right? If we do get a pullback, not only am I going to be looking for a pullback to the daily 21, which is down at 187, that would also give you a nice little pullback to the trend here. If we zoom out, let's see, let's zoom out here. This is a longer term trend channel. Just been trading within this channel for, I don't know, since February. It's been pretty nice. Yeah, every time we've gotten even remotely close to this, we bounce. So I'm going to be looking for this trend to continue to hold. Even if we get a retest of the prior lifetime high at, was that 183? You know, that would make sense. So 183 is going to be pretty nice. You could probably draw some fibs here to see where Fibonacci retracement takes you. But overall, Apple, it's incredibly strong. No doubt about that. Let's see here. I don't really have any divergences. Nope. On the hourly, 30-minute is okay. The one thing is you're just in this interesting spot where, do we get a break? And if so, do we break 190? If we break 190, then we could see mean reversion. But this thing's just been an absolute roar. You do have a little bit of a cross down on the oscillator with negative thrust on the 30-minute. So over here, this is our 30-minute troubles. And on the hourly, yeah, we'll see if this can manifest into something. You do got a squeeze shaping up on the hourly. If you do happen to lose this, yeah, the hourly 200 can be in play also. So we definitely want to pay attention to that. That would also, if you do get a retest of this hourly 200, that would definitely give you a retest of the prior all-time high way down at 183. So want to pay attention to that. On Apple, it's just top. If you're, I mean, obviously Apple long-term is great. You have the rebalancing situation. It hit 3 trillion market cap. It's just been absolutely insane for Apple. So congrats to all the Apple bulls out there. You know, y'all are killing it. just keep in mind that, you know, the smaller time frames, it's again a little bit sloppy. I'm not going to say it's going to roll over from here and we're just all going to scream and call our mom crying the next day, but we just kind of want to pay attention to it for sure. If we do get a break of that trend channel, then sure, I will want to pay attention to that for sure, because that could be maybe a personality change on it. So if this breaks this, then yeah, we might have a deeper issue for sure on Apple. But yeah, we'll have to see. I'm not bearish by any means on Apple. I'll probably never be bearish on Apple unless they change something with their products or something like that. But we got earnings coming up too. Maybe we'll get some more insight into their fundamentals. How well is their cash and all that kind of good stuff. Also, they got the new AR thing coming out relatively soon. What, in 30? Something like that. All right, so let's move on. Do you? Yeah, we'll take a look at do you. And then we'll do a few more, and then we'll go over my main watch list. We already talked about the energy guys. We talked about Microsoft. Oracle's definitely going to be on there. Do you? This one's funny. 900 million cash, 300 million MSC China's biggest streaming service owned by Tencent. Okay, well, you do have a level here, 95 cent. Oh, we're in penny land. How fun. I don't trade pennies. Not anymore, at least. All right, let me zoom out here. Let's come over here to the trading view field here. So where did this come from? All right, so you started at $6 and you've failed miserably in life. Come all the way down. I'll have to look this one up. I haven't quite heard of this, and it's a streaming service. I'll have to look that up. All right, so you do have a tradable bottom here to work with. Let's get a zone going, rather. Clear you. And let's go you. Yeah, you got a tradable bottom here at about that 90 cent. Obviously, if you break 90, down you go. That would be a new lifetime low on do you. Your swing high is at 120, 125, it looks like. All right, so there you go, 90 cent to hold. 90 cent to hold, you do got to squeeze. Yeah, look at that. And if you do get this run up, 120, 125 is going to be your next spot because you got the the daily 200. It looks a little thin. I would be careful. Yeah, Lord Business nails it on the hammer there. First rule of Fight Club: don't trade Chinese junk stocks. You really don't know what's going to happen, what kind of regulations, or if they're going to pump it or what. China can get a little bit wacky. This looks really thin. Russell, you asked about Google. Yeah, we'll jump into Google. I don't know how much shares does this thing trade? FinViz. I probably could just pull it up on TOS, but I'm lazy. Not really. Let's see. Market cap 323 million. Low. They got almost 2,000 employees. Damn. Insiders only own 3%. Yikes. Institutions own 20. Short interest is, yeah, it's kind of low. So that's not too bad. You don't have to worry about shorts perhaps too much. Yeah, it's very thinly traded, so you definitely want to be a little careful here. I'd be worried about getting in and not being able to get out. Yeah. Was that 50,000? I'm staying away from that one. I'm not going to recommend doing anything at all with this. You have support at 95. I'm just worried that if you get in, you're going to have troubles getting out. There's going to be some liquidity issues. Sure, you got a daily squeeze, but something that trades a few thousand shares a day, I'm probably running away. Do you rhymes with Baidu? You know, got jokes today. Google. Let's jump over to Google. Yeah, I'm probably staying away from that, Jordan. Personally, all up to you if you wanna play that. Just please be careful when you get into something like that. All right, Google. Google's quite interesting. This look, you know, we had this high compression squeeze a few weeks ago. It fired short, went back into high compression, fired short again. So if we look at the price, here's your high compression squeeze. You broke down, squeezed again, and it looks like you're trying to form another squeeze after coming back up to the daily 21. What I don't like about Google is you close back above the 21, gap down, and now you're rejecting the daily 21. Bright side here is you're just getting really, really tight. So if you draw a trend line from here to here and here to here, you got this nice little wedge going on. Which way is she going to break? If she loses this daily 50, to me, that is, SpaghettiOs. You know, when I look at a chart like Google or anything of that matter, one question, you know, you can sit there and go, well, where's the beef? Is it in Google? You got somewhat of a good trend here, but right now it's not really filling my appetite. It's watered down beef. It's that Taco Bell meat right now. So I'm still kind of waiting for clarity on this. You got a tight little wedge here. I'll give you that. If we can get a daily close back above the 21 like we had up here, then great. Maybe we can go back and revisit 125, and we'll go from there. Maybe this squeeze can slingshot back to the upside. But if I look at the hourly, you got a little bit of a damage here. You see how the hourly 200 acted as resistance on that run up here? It acted as resistance. You had this bull flag. The bull flag gap down. Ever since then, it's just been damaged goods. So they have to repair this. You also see on the oscillator, yellow has moved below red. Every time that the yellow has moved back towards red, it is also acting as resistance. And every time you get those sell signals here also, even on the 30-minute, starting to enter a 30-minute squeeze. Again, if we start to lose this daily 50, or if we start to lose this trend line, that's a terrible drawing there, I apologize. If we start to lose this trend, then yeah, I'm leaning that Google might go short. But we'll see. Like I said, we got the rebalancing coming up in a few weeks. But the levels are pretty clear. Lose the daily 50. Oh no, look out below. And where's below? I got a level here at 114. You also got the 50% retracement from the prior all-time high to the swing low that you could possibly revisit down at 118. And we'll just have to go from there. So it's tight. It's tight. It can honestly go either direction. Maybe we'll pay attention to the options flow. But yeah, I like it above 120, 122. I think that sets up pretty nicely to the long side. If it goes below, if you do get a close below the daily 50, I think that spells trouble. You also got that nice little channel there to work with. So I'm patiently waiting for something here on Google, and it is going to be on the watch this week, no doubt about that. As we progress forward, and if we also happen to get a down arrow here on the thrust, that'll be another warning signal from me. But there are some warning signals on here. I just have to be patient to wait out the storm, so to speak. I don't want to be too early getting in on either side at this moment in time. So yeah. Plus Bard. I don't know if Bard is done. Have they updated Bard? I mean, if you compare Bard to GPT, I give my winnings to GPT for sure. Let's see. MRVL from the plumber. Yeah, let's talk about Marvel. Now, Marvel, this one was looking pretty good last week, and it's still not too bad. You got a nice little pattern to work with. I got all these levels. Let's clear those out so we can clear that. All right, so you had this nice little trend. You're holding earnings gap, which we can probably put a anchored VWAP from that. Look at there. There's your anchored VWAP from the earnings gap up. And we're just trading within that range. So holding 57, so that's good. As long as you hold 57, you're pretty much good. You've tested it 3 times. You had this nice little breakout here at the beginning of the week. I was expecting follow through. We didn't get it, obviously, and we moved back down, bounced off the gap, and since then we're just kind of wait and see approach. Now, looking at the signals here on MRVL, you can see that we are trading above the main moving averages. We got a squeeze here, which started to fire short. Now we're coming back into a compression. You're holding the daily 21, and you can see that hourly is a little bit messy, but we do have a crossover here with negative thrust on the hourly. They can easily repair this, as we have talked about before. It needs to do some work, though. No doubt about that. So Marvel, let's see if it can get itself back above 60. That'll be step 1 here for me. Get above 60. At least an hourly close above 60. And we'll go from there. If not, if we start to lose the daily 21, you could get a gap fill, which would put you right back at the daily 50. Overall, it's still pretty bullish. You got a weekly bull flag, in fact, in play. If that does play out, I mean, you got a nice little good potential here to push on higher. We'll have to see, though. Marvel, it's a good name. We'll see if that gap holds. If it gap fills, so be it. But usually a strong earnings gap like that, they typically hold, but I wouldn't be surprised if it sweeps the legs, so to speak, and kind of revisits that. So we'll see. You got good levels to work with, no doubt about that. Get above 60, great. If you get above 50, get below 57, bad. Easy peasy. Nice bullish flag on the daily. Yeah, it's a nice tight range. We just got to see it. We got to confirm that bull flag, and we got to make sure that we hold those support zones. No doubt about that. And you can kind of get this picture here. There is no lacking in bullish setups out there right now. We just have that questioning of, we got the inflation data, we got all these Fed members speaking, we got, you know, the rebalancing, which it might not affect Marvel. But with that being said, just play the price action. Just play the price action and no headaches. If you lose that 57, okay, you lose 57, you get out if you're long. If you break 60, you can hit that buy button and play it to the upside, play that flag breakout, play that weekly bull flag that's shaping up. I mean, there's so much you can do out there right now. And, you know, just look for those key setups that you like the most, that fit your personality, and play off your strengths. And, you know, don't do anything that would go counterintuitive to your personality. So yeah, good look on that Marvel chart. So I'm rooting for Marvel, not gonna lie. I might actually, if we continue to hold that 57 level, I might pick something up there. Maybe shares, we'll see. Let's see. So yeah, Marvel, nice look, Plumber. Thanks for bringing that one up. Dino. See, I also have a question about AMD. Yeah, we'll take a look at AMD. Dino, oh, okay, look at there, Dino. I like this one a lot better, Jordan, just by looking at the quick glance. Let me pull it up on TradingView also. All right, so let's see. HF Sinclair Corporation. Once again, you Jordan, you pull out some interesting names. I'm like, who are these guys? That's always the fun part about it, you know. All right, so let's take a look here. All right, we had a lifetime high of 66, it looks like. Let me make sure. Let me go to a monthly chart here. No, we had a lifetime high of 83.42. Ever since then, we've been a little bit sideways. Okay, so that gives me some historical perspective. All right, let's do... You can probably do some fibs here just for fun. Let's pull it up from the top here and just go to the bottom. Ooh, look at that. That 48 level. That's juicy. Oh, man, I love Confluence. All right, so... Oops. Sorry. Don't mean to make y'all go crazy here with me. All right, so 48.22. That's going to be your 382. Nice little level. You do look like you're starting to enter a squeeze. This is improving. It still needs to cross yellow over red. You do have some positive thrust. If we can get this above 50, great. Hourly, yep, this is looking better. This is looking better. This is looking better. 30-minute, that's looking better. Did a deep dive on P&B stocks. There you go. All right, so if we can clear, what was that, 46, you're looking for 48.22, 48.22 to 51, which will be your daily 200. So just remember, you are below the daily 200. Anytime you're below the daily 200, think of that as the bullish bearish equator, so to speak. You're below the 200. Generally speaking, there's bears probably going to be all over this looking to bite. So with that being said, you do have a 21 crossing back above the daily 50. That's a good sign. So that is a signal to work with. You do have a nice little level to work with off this 45.80, 46 zone. Once you get above that, you do have prior support acting as new resistance at that 48 level. And then above 48, you got the daily 200 at 51. So you got some really clean levels to work with. Just know, man who picked bottom have stinky finger. You're not really picking the bottom, but you do have a nice little level to work with. You got a little rising triangle there. If we do get an hourly squeeze, hopefully we can hold that 45 mark and go from there. So Dino, it's not bad. It's not bad. I probably won't trade it. I'm not familiar with it, but I will observe it for you just in case you have any questions along the way. So yeah, nice little squeeze here that's trying to shape up on the daily. The signals could be a little bit better just because this is technically neutral bear because yellow is still below red and we're below the 50. So if this can fix itself, great. You do have the early buy signals on the thrust, great. Hourly, you have, what I like about the hourly here is you had these sell signals down here, followed by a mid-level buy. That is actually one of the most powerful signals that the indicator can give off, and up you go. So this is actually looking pretty good on the smaller time frames here. So yeah, good look here on Dino. Cautiously bullish. Where I'm wrong is back below the daily 50 for sure. So that would put you back below 43. Close below 43, I'm probably leaning back to the bear side, especially since you're still below the daily 200. All right, let's go to AMD. And you're also seeing Chevron CVX being posted in a few places. Yeah, we talked about Chevron earlier. If you want, you can go back. We do have this recording. We do have it live streaming on 3 social media places. I had it streaming on Kick, but something happened there for some unknown reason. All right, AMD. Let's just take a look at SMH first real quick. Semiconductor ETF. All right, same thing here. Is this a head and shoulder pattern? There's your neckline. If you lose this, look out below. To the daily 50 you go. Gap support down there at 139, 140. That's an idea. You can see here on the hourly time frame, if you lose this hourly 200, that could be a problem. You got the oscillator also crossing down. You're still above 50, so that would put us in the neutral territory, which means we look down below where we have a down signal at the 50 mark. So that's kind of a warning flag here for me as far as the semiconductors, not to mention you have this possible head and shoulder pattern coming up on the daily that we'll have to pay attention to. With that in mind, let's take a look at AMD. Ba-da-ba-bum. Ba-da-da-dum. I don't know what I'm singing, but I'm singing. All right, AMD. Let's take a look. Well, let me zoom out real quick, make sure I don't have a divergence. Ooh, I do have a divergence. Cool. Okay, so higher high. We talked about this on the SPY too, or the SPX, depending on what you use. Here's your high. Here's your higher high. Here's the oscillator high. But look at there, you got a lower high. Divergence, divergence, negative divergence. What happens when you have divergence? You come back to the scene of the crime. In this case, you already came back to the scene of the crime, which was that 116 level. But let's see, let's actually put a level up there instead of eyeballing it. Let's go 116. I was pretty good there. All right, so 116. Yeah, look what happened here. You had support. Broke down below it, came back up, hit 116 and resisted. And you also have that resistance candle close on Friday as well. So 116, that's going to be your key level here on AMD. If you can get above 116, sure, we can revisit 120 and 122. If we start to break down the daily 50, that could spell trouble, but you know, we have to see it first. So 116 is going to be your level of resistance, whereas 107 is going to be your key level of support. We'll zoom back in just a little bit more, just so you can see that a little bit better. Let me clear that off real quick, just so you can see it. So yeah, there's that 116 resistance. Here's your support that you've been building here at 107, which will undercut the daily 50 just by a little bit. You're not in a daily squeeze, but you can see that the momentum is still pretty bearish here on the histogram. This is technically still in good positioning with upward thrust, so this signal is technically still intact. It's actually a new signal. You just got to make sure you don't get a down arrow here on the daily. We'll have to pay attention to that. As far as your smaller time frames, your hourly, you resisted the hourly 200 here, which is at 118. That would put you back around here. And let's see, don't have a squeeze just yet. This is neutral, so when that's neutral, we have to look at the signals below. There's your downward thrust signal from there. So a little bit messy here. I'm not going to call it just yet, unless we do get a breakdown below the daily 50 and this 107. You got a good level here to work with. I definitely like that. So if we're trading in this tight zone between 116 and 107, that's a 9-point zone to work with. So 9 points, 115, that would put you back at about that 124. If we break to the upside for the measured move, if we break down to the downside, yeah, that could put you back down to that 100 level for sure. And you got the weekly 21 EMA down at 102 also. So yeah, AMD, good clean levels to work with. 116, that's your bullish move. 107, 108, that's your bearish move. We'll call it 108, 107. Right there, so mark it down. All right, so let's go a few other ones. Caterpillar. This one's pretty good. You had this nice move on Friday compared to the rest of the market. You are entering a daily squeeze, but what I like about this one too is the hourly structure is still shaping up pretty well here. You got white over blue, blue over red, the red's pointing up. You just need to clear about, we'll call it 250 to move towards 260 here on CAT. You got good structure, you got good positioning on the oscillator, you got good thrust also. You got a daily squeeze shaping up with good thrust signals on the daily. So I'm liking what Caterpillar might have to offer in the coming days, especially have rotation. Another one that I'm going to be looking at is IRM. This is Iron Mountain. This is going to be a lifetime high breakout here on IRM. If we see here on the weekly chart here, I'll just bring up trading view so I can see it a little bit better. IRM. And let's go to a weekly chart. Yeah, there you go. Look at this move here. You got your prior breakout level here at 4150. Resistance, resistance. You broke out new highs, came back, retested that 4750. And since then, you've been trying to make a new lifetime high here. So Iron Mountain, watch for that break above 58. If you do get a break above that 58, let's see where that will take you real quick. Let's bring out our Fibonacci tool and swing it. 68 will be your next spot. And then, of course, if we put the full measured move. That would put you at 73.89 if she wants to have that full measured move off of the swing high to swing low. That gives you these nice little juicy targets here for IRM. I can't remember how liquid, if they do have liquid options. I'll have to go double check that once we're done. But yeah, IRM looks fantastic for some upside potential. Let's see. Let's go over to, let's give a few months, a few more. DraftKings. DraftKings had a fantastic Friday. Maybe everybody was betting on the fight or something like that. Need to break above, well, your continuation of 27 will give you to 28. Nice daily squeeze, looking to fire long. So if this thing wants to party, she has the possible momentum to do so. We know that a squeeze, when it does fire in the primary trend, it can last up to 8 to 10 candles. So that gives you a nice little move. So yeah, DraftKings, I'm watching for this one for potential upside. Roblox, we've been watching Roblox for what seems like an eternity. Nice daily squeeze here. Every time it's come up to that 43 mark, it seems to reject in beautiful fashion. Paper shredders is what they do in large part. Really? Huh. I thought they were like an outdoor store. Totally messed that one up. You can tell I just mainly look at the price action than looking at fundamentals sometimes, but it is what it is. Roblox, yeah, 40, 42, 68, 43, that's your key spot. You know, 43, this thing's been resisting for quite some time now. If we get a break above this, that could definitely send it to gap fill towards 45. Shorts are going to be defending this area like their life depends upon it. As they have continued to do so, you got a nice daily squeeze that's looking to fire long. You got 3 bars here on Roblox. With that in mind, I'm leaning that it does break. Just kind of waiting for it to happen. This is neutral, so we look down below. And as long as if we get another arrow here, I mean, looks good. And then if this hourly can give us an up arrow also, that could very well send things there. So I'm going to be watching Roblox this week. Let's see. What do I think? Walmart. Walmart is... Yeah, for those that don't know, I personally don't trade Walmart. I have family that works in management, so I don't touch it. But Walmart, we can see here on the technical standpoint, you have a nice resistance level that we broke out of at about that 150 to 153 mark. We've established new resistance at 158, and we've come back and we are retesting this breakout level. So for me, is if we close, say if we get a candle close like this, yeah, you could possibly come back down to this 144 zone. So I would wait to see what tomorrow brings, because we could easily bounce off this key level, this key zone, which has been acting as supply. We'll see if it is now acting as demand, which it has done twice previously in the past 2 or 3 weeks. But if you do break down below, everyone who bought up here is now going to be looking to unload, and that could very well give you additional selling pressure. So it's in document management. That's crazy. Learn something new every day. All right, we are at almost an hour and a half. What a long Sunday session we've had today. I appreciate y'all. So negative divergences on the SPY. We need to see if that will play out. Looking at the futures here, currently the price action is rejecting off of VWAP. It's light volume on a weekend. We'll have to see how the Asia markets finish up. And then, of course, we got European Open at, what, 3:30 a.m. Eastern. We'll see how things shape up in the European markets. But like I said, we got this interesting divergence in play, not to mention the bonds rebalancing. We got inflation data. There's just a lot going on this week. So my advice to you is have your levels If you have any questions, you can reach out to me on Discord, or you can email me at fuzz@stockdads.com if you want to get in touch with me. But yeah, it's going to be an interesting week. Trade maybe smaller size. Don't go too crazy just because there's a lot going on. There's a lot of speakers. We got the inflation data. We got rebalancing coming on. There's just a lot of stuff going on this week. I appreciate you, Stock Market Plan. I'll be sure to give you a follow and be on the lookout for your content as well. I definitely appreciate that, man. Yeah, just keep it smart. Know your levels. Keep it safe. And go in with a clear mind. And I'll be with you guys in the Discord for sure, trading with you live tomorrow morning. And we'll try to get some good plays this week. So yeah, be smart. We got a nice little fun week ahead of ourselves. I'll catch you guys in the morning. Y'all take care. And I will see you guys tomorrow morning. All right, guys, take care. Peace out.